So what are your reflections of Climate Week so far?
Pure and utter craziness, man. It's been a great week. It's been a great week. Tons and tons and tons of focus on distributed energy, right?
Mhm.
Connections into the grid, all the distributed energy resources across the country, how many different groups are focused on battery tech, the differences between battery tech and backup generators versus solar energy, the number of folks that are installing solar energy with, credit issues that are going on now with the change in
Mm.
administration.
Yes.
So lots of good conversations, a lot of energy. I actually feel like the energy is more positive this year than it was last year. Last year we were in the middle of the administration change. It was before the
Mm.
election. So everybody was kind of up in the air on what is
Mm.
the next 12 months going to look like. It's been a lot of changes that have happened in the last 8 months, but I think at the same time, people have gotten a little bit more comfortable with understanding of what's to come and kind of plan for chaos and tariffs and changes and other kinds of things. But overall, it's been a really good week. It's been a really good week.
Yes, you could argue we have more policy certainty than we did this time last year. And even though that policy reality we're in now is not the one we'd have chosen for the renewable space, for clean energy, for adaptation resilience, at least we know what environment we're operating in.
Yeah, yeah. What's interesting, I think, is that you're kind of seeing groups able to make more definitive decisions
Mm.
on decisions that have now been made, right? That were up in the air last year of are the credits going to go away? Okay, if the credits go away, how are we going to react? Now people have reacted, and now I think you got more private investment coming in. You got people who are actually looking into the space of what alternative energy resources there are, folks that are actually investing into doing it where you're not going to have government subsidies or you're going to have limited government subsidies or involvement. And sometimes, I wouldn't say sometimes, a lot of times I feel like private money moves a lot faster than public
Hmm.
money. So we'll see what happens. We'll
Mm.
see what
Yeah,
happens.
just look at all the massive flows that have gone to AI, right? Who
Yeah,
would have thought that
exactly.
5 years ago?
Exactly. Exactly.
Have you noticed a change in terminology as well, though? You talk about distributed energy, and a lot of folks have been talking about that in the context of resilience, right? We need to have a resilient energy grid to deal with the increase in demand because of AI, because of the increase in cooling demand we're going to see as
Yeah.
heat waves continue to ravage the nation. And some people use resilience in the format of like defense as well. We need to have a resilient national security, and
Yep.
having a distributed grid is part of that. What language are people using in
Yeah.
your
What's
constituency?
what's really interesting for me, and this was a learning I had this year, is the distributed energy resource revolution around resilience is actually not tied into the grid, right?
Mm.
It's about standalone individual resources of distributed energy that are actually very difficult to tie into the grid. So you have a lot of these energy initiatives and energy products around data centers and other things where there isn't always grid integration. So it's not about grid infrastructure
Mm.
resilience because the utility companies aren't keeping up as fast as some of these grid projects are being built. So you have a lot of these distributed energy resources that are being built across the US that are not tied to the grid. So it's not actually creating grid resilience. It's more individual resilience to whatever the company or the business or the area or the town that's kind of building their own, call it a standalone grid that they're using for their own energy. Have seen and heard a lot of conversations around that this week,
Mm.
much, much, much more than last year. Still a lot of energy companies here that are paying attention, that are talking, and I feel like they're becoming more of a we want to invest in some of the solutions that are going to help fix this problem rather than them being the ones that are just going to try to fix the problem themselves.
Mm. That fortress mentality is quite interesting, and you hear it in the context of data centers a lot, right? To power AI, and the fact that there's massive energy demands that these data centers have, and then having your own power source that's detached from the grid is a way to actually ensure continuity of supply. But I wonder, is that a pressure then? Does that make certain traditional operators think, oh goodness, we're going to lose a lot of business here, so we need to actually up our game as well?
Yeah, I do. I do. There was a panel that I had heard this morning. I don't remember, in so many mix match of
Yeah.
panels, but somebody had thrown out this comment. They provide, continuity services around energy for businesses in New York City, right? Where your bill is more consistent and they help you manage your power consumption. And they were saying that I want to say they said 51% of the cost in the electric bill is getting the power to the business, and only 49% of the bill was the consumption of the consumer that was actually at that business. So when you think about that cost and transmission, that is a critical infrastructure piece, upgrade, whatever you want to call resilience, however that needs to be updated, that is coming through the utility, which is why distributed energy that you could potentially put in your own on-site battery to back up and have more stability and less cost is where a lot of these smaller tech companies that have now come up with new innovative ways to put batteries into appliances and batteries into homes and batteries into businesses is just booming like crazy right now.
Well, there's clearly a chunky amount of overhead that potentially could be reduced, right? And that's always an invitation for disruptors to come in and have
Yes.
some fun.
Yes. And as an insurance guy, I always think of batteries, right? You always hear the crazy stories about lithium ion batteries and like cars exploding and different things. And you think about, I immediately thought this morning as I heard an appliance company talking about using batteries in appliances. And I'm like, this is great that it's in a certain type of stove or maybe a certain type of boiler system, hot water heater, whatever you want to call it. And thinking about, the amount of batteries that are going to be put into houses and what happens when the battery malfunctions now. Is that going to be a litigation suit from the insurance industry now that they're going to have to go after a battery company? There's a lot of new learnings that are also going to come out of these things as they continue to evolve just based on current systems that were there, case law that's been in the insurance space for a long, long time, who's liable and responsible when these things malfunction. And there's not very much historical data for the industry to price these things, right? Because they're all brand new. So for me, I feel like it's going to be something interesting to see over time.
Yeah, I do feel like we're putting up new rows of dominoes that could fall down very
Yeah,
quickly
right, exactly.
in response to a physical climate event, through policy event, through overload issues. So I feel that, yes, there are a whole new range of risks and fragilities that have been built into these new
Yeah,
systems. So exciting space to be in, but also a bit nerve-wracking at
yeah,
times. All right, I want to talk now about Adaptive Insurance, your
yeah.
company. Can you tell us what it's all about and why you set it up?
Yeah, so I consider us a climate resiliency company at heart, right? We set up a technology platform that's kind of half insurance, half technology. So the technology side is really around leveraging, the latest advancements in AI and data availability to understand what's going on with the climate, what's going on with the power grid, how are those things, impacting customers at the end of the day, costing them money, trying to figure out ways to help them create resilience for their home, for their business, whatever it may be, whatever asset they're trying to protect. On the insurance side, we're building out a parametric insurance platform that's really designed to be able to get money in the hands of a customer very, very quickly after an event occurs. You think of a traditional policy, the average claim time is usually anywhere from 2 to 6 months,
Mm,
depending on how large the claim is. In the parametric use case, it's an if-then policy, right? It's a specific event that has a specific trigger that is usually either the event happens and it triggers the policy, or the event doesn't happen and it doesn't trigger the policy. So in our case, our first product we just launched is called Grid Protect. It's a short duration power interruption policy that's designed against short duration power outages that last less than 24 hours. So if you're a business, you want to buy a 12-hour cover for a 12-hour outage and you want $10,000 in coverage, that's what you purchase. And if the grid fails to your location for 12 hours or more at any point in a 12-month period, which is the length of the policy, we'll typically be able to make that payment to you within 24 to 48 hours after an event occurs.
and that payment, is that supposed to cover then the business interruption that
Yeah,
grid's
essentially,
down?
it's a non-damage business interruption, right? Because even if, even in cases where, you might have a distributed energy resource on site, where they might have a backup battery or they might have a backup generator, in the case of a business, they're still going to have a business interruption, right? We're here in New York. If the power goes down to Lower Manhattan right now and you have a backup generator on your restaurant, it's great that you're not going to have any food spoilage and you might not have any surge damage to any of your equipment because you had a backup power source. But if all the stoplights are down, all the traffic stops, nobody's coming to your
Who's coming
restaurant
in?
today,
Yeah.
right? So you still had an interruption. But I think the more important piece for us, and this is where I usually hit on the resiliency piece, is around having access to capital very quickly after an event to make a decision, right? We're not trying to, get rid of core insurance policies like a BOP policy or a commercial general liability policy. Like those things exist for a reason. You have exposures that you need to cover with those broader policies, especially in a catastrophic loss type of scenario. What we're doing with Parametric is trying to create a more optimized situation for the consumer after an everyday style event happens, right? Short duration power outages happen considerably more often, especially now with the need for, power growing and the fluctuations in the
Mm.
power grid, where it's not because of a hurricane or a tornado or an earthquake that typically knocked the power down to the local business. It was, an SCS event, a severe convective storm rolled through, or there was high wind speeds, or there was a flood, or all these other climate events that continue to happen more and more often. So the goal is, how do we help a business make a smart financial decision in the most important moments right after the event occurs? Because that's typically the piece that we've seen in our research, that it's the most important time for them to make an important decision on what they do next. Where do they invest that money? How do they use that money? And what types of partnerships and other things can we create to give them access to, to make better decisions at those times?
Yes, well, being a small business myself, I have very thin wriggle room if something
Yes.
goes wrong, right? So I understand the speed of getting access to capital is as important as the amount of capital you're getting. Sometimes even more important,
Yes.
because especially if you can see the end of a rough period, and usually grid outages, they can be of medium to long duration, but often they can be solved in a few days.
Yes.
And if you know that's the case, if you get money now, then actually you can mitigate a lot of the pain that would have happened if you didn't have that in the first place. So
Absolutely. And one of the things that we get a lot of questions about in the parametric space is it's not a required insurance product, right? It's like a luxury good. You don't have to have our product for your business, where you likely have to have a liability policy if you're a restaurant, or you have to have a, commercial, business owner's policy to own a business. And the way that we look at parametric, and it's super unique being an insurance professional with this, is we can actually calculate the expected return that you're going to get off of an adaptive policy, because I know what the likelihood is that your business, based on your location, is going to experience an outage at any point in the next 12 months, to a fairly accurate, what we believe we've predicted down to a fairly accurate level from a pricing perspective. So over that course of time, we can help you understand what the investment is that you're making and how much coverage do you actually need, right? Does the business actually suffer an impact? There's some customers that just a 12-hour power outage is, yeah, I don't have any damage. I actually don't mind the business interruption. I don't need to spend money on an extra policy because this doesn't impact me. Others have a very significant interruption because they may have very thin margins, and they may say it's well worth me investing in this product if there's a 40% chance that I'm going to have a power outage in the next 12 months.
which could be fatal.
Yes, which could close your business or force your business to go under. So those are the conversations that we have. Obviously, it's a new product. There's a lot of education that we do, both on the agent channel as well as directly in with the consumers themselves. But it's an interesting opportunity because, being a non-indemnity product, in essence, right, being parametric, the business owner is the one that gets to decide how to use those funds. Unlike me as the insurer would be telling a customer after a claim, here's $12,000 to replace your roof. There's no incentive for you to do anything better with your roof to make it more resilient to the next event that could come through, where in our case, maybe you take the $10,000 parametric payment that you got and you invest in putting a backup power source or power supply at your location, or you invest it into new equipment for your restaurant that's going to save you money on your energy bill because they're now energy certified. There's a lot of different ways that we could package that up for our customers.
Yeah, I didn't think about that. The power and flexibility you actually give to policyholders through this product. And I want to get into some of the nuances of parametric in a
Yeah.
little bit, but actually, I'd like to ask what makes you, Mike, and your team well suited to put together this sort of product, this sort of business. What's your own background in
Yeah,
insurance and tech?
so I've spent, the better part of the last 22 years in the insurance space right out of college. Not something I ever intended to do when I was in high school and middle school, but ultimately when we get into insurance, you usually stay. So I've had a tremendous career, opportunities to work for wonderful companies across the US. I spent time with Nationwide Insurance, which is a mutual carrier. I was with Allstate Insurance for a number of years, which is a corporate carrier. I was a first 10 employee at Hippo Insurance, which went public back in 2021 through a SPAC. Spent about 4 years with them and did everything on the underwriting, product development, did a lot of stuff in the home IoT space with our Smart Rewards program and helping kind of push this new wave that you now see of IoT sensors in people's homes across the US, which also let me build out a great network of folks who've been through the startup piece before. So I've pieced together a nice team of folks around me that are incredible at what they do. My co-founder, Arik Yelovich, was an early engineer at Hippo, lives in Austin. We've been friends for a long time, so was able to get him to come in and co-found the company with me. And then we've just built a really solid team around us. We have 6 people on the team now. Most of us are based in Austin. It's been great to build this out, and we had a kind of a unique start. We came out of a venture studio called Montauk Climate, which is now Montauk Capital. They've rebranded their name. Really great group of guys. Philip Krim, who was the founder of Casper Mattress, very successful entrepreneur, had built out this team. I'd known Philip for years, and we started kind of formulating this idea around energy services, and how do we bring in a parametric product. And I was helping them as a consultant from an insurance product development standpoint. Got super excited about what we were building and didn't want to hand it off to somebody else. And, they offered for me to start the company and come in as the founder and build out the team. And it's been a lot of fun since. That was February of 24. So we closed our seed in February of 25, and we've been rocking and rolling since.
That's wonderful. And the older I get, the more I realize that it is the networks you build, the relationships you build, sometimes in big established companies, sometimes when you're doing what I'm doing, freelancing, you meet so many interesting people and they're suddenly these connections you can start to make in your own head, like, if I join these people, we do this, we can build this, they can fund it, I need him to be my co-founder, her to be my CTO, whatever. You start to put these connections together.
Yes.
And Montauk Climate, Montauk Capital, yeah, I've got to know them as well through Adaptive, and they have this thesis about how the energy grid is changing and the importance of moving molecules, I think is the term they
Yeah,
use,
the
right?
electron economy is what they've coined.
Electron economy. Can you
Yeah.
talk a little bit about that and the business thesis behind a company like yours?
Yeah, I mean, it's really around this ecosystem of it's going to take a village, right? There's not going to be one singular solution that's going to solve the energy problems that we have today, right? I talked to my co-founder Arik about this, who's from Israel, and we talk about like the difference of, you think of the size of a country like Israel versus the size of a country like the United States, right? How difficult it is to transmit power from the East Coast to the West Coast. Just the vast size of the, United States is so huge. There's so many different opportunities, yet everything kind of intersects in some way, right? So I tell folks when I think about what Adaptive does and why it's so important with what we're doing is, there's really two things that are certain with what we do is that insurance is behind everything that every person on the planet does in their daily lives, and they never realize it, right? You don't drive a car, you don't get on a plane, you don't go on vacation, you don't own a home, you don't own a business. There is an insurance policy behind every single thing that everybody
Don't
does.
have a pet. I tell you what, pet
Exactly,
insurance.
pet
That's
insurance,
the big
right?
one.
It's everything we do has an insurance product behind it, and the second piece is everything we do in our lives relies on power, right? If the power shuts down, like we saw in Spain, earlier this year, everything just comes to a standstill. People can't use their phones, they can't use their computers, you can't pay bills, you can't do anything. So for us, it's how do you combine those two things together to make sure that we're able to help provide some level of protection to be able to react to those events? And from Montauk's point of view, and obviously they have some incredible portfolio companies that they've spun out that all have individual styles and actually all fit together very well in the goals that we have of this energy transition and what they've dubbed the electron economy, right? Everything is around the electron, drives everything that we do and has a tremendous impact on our daily lives. People don't realize how much they rely on it until they don't have it right there to rely on, and that's something I think that we're all looking to try to just make better.
But on your own business case, the way I think about it is that, yes, no matter how well we upgrade our grid, no matter what we do to harden our power supplies, there's going to be outages, right?
Yeah.
And that's where you're going to be making your bread and butter. But is there an argument to be made that actually, as the grid gets more efficient, as people start investing more in distributed energy, have this fortress mentality around energy, there's more backup generators, there'll actually be less of those sort of outages that folks need to cover. So how do you think about, yes, the next 10 years in terms of how your business could evolve?
Yeah, I wish I would. I wish I could sit here and tell you that I think it's going to get better. All the projections show that it likely isn't.
That's true.
Right. The grid infrastructure in the U.S. There's what 70% of the U.S. grid infrastructure is dated and needs to be upgraded in the next 10 years, which is again to the scale scenario that I just mentioned a minute ago is just a massive undertaking. And it's not a massive undertaking by one group of people, right? It's a massive undertaking by 4,000 different plus utilities that manage the U.S. energy infrastructure. So it's a very large problem. I don't see it getting better, but from our perspective, it's not just about power, right? Adaptive, when we talk about climate resilience, it's more holistic than just power consumption. Grid Protect is our first product. That's what we've taken to market. We've launched it across 18 states in the U.S. so far, which gives us coverage options in about 53% of all homeowners and commercial businesses in the United States. But we will continue to expand our product offering into other climate-based related parametric products where we want to be able to take the value that parametric brings of the speedy claim payout, access to capital very quickly, the binary insurance transaction where I don't have a moral hazard of trying to underwrite a person or what their business does. I'm just underwriting an event that's going to take place at that location and creating more opportunity to have resilience through parametric offerings that we're doing. And our data platform also allows us to do quite a bit in that space with just how we look at climate data, how we model that data, how we try to predict what the future is going to look like for these businesses so they know how to prepare for the next event that's going to cause them some level of a business disruption or a homeowner some level of a lifestyle disruption that they're going to have.
This is why I think parametric is such an exciting space because you can craft very different products for different hazards, for different use cases, and technology and the increase in available sensor data, geospatial data can help with determining the triggers, what triggers those policies. But I want to get then to one of the complaints or concerns about parametric, which is this so-called basis risk, right, between your actual exposure as an individual in the business, as an individual or a business, and the actual event that happens. Because you can have these occasions where there's a terrible event that happens, and but it doesn't trigger certain thresholds, and so the parametric doesn't get paid out. Similarly, there can be an event that kind of qualifies as a triggering event, but actually doesn't cause you much damage, and you get paid out anyway, and that's not great for the insurance point of view. Now, you've got a seems like very structured, commoditizable product,
Yeah.
right? So you've obviously done all your sums to make sure this makes sense. But I do wonder, how do you communicate basis risk to people? How do you communicate the fact that your product, it kicks in 12 hours? So if you have a power outage for 11 hours, 59 minutes, sorry, buddy.
Yeah.
How do you communicate that? Because that could be spicy conversation, I imagine.
It can be, and fortunately for us, to this point, we're very new to market, right? We've not had an event yet that has caused the policy to trigger, but it will come up, right? That's part of the communication process, and this is something that the insurance industry as a whole has never done well, right? We've never been very good at communicating with policyholders. The traditional theory that I've always seen around insurance for a long, long time, especially pre the insurtech revolution, was we write the policy and we don't touch it again until renewal. And when we do the renewal, we make it as seamless as possible. And you just want to keep that customer there and retain that customer without them ever using your product. You don't want to communicate, because if you communicate, get them thinking about insurance, they might go shop, and we don't want them to shop, right? In the parametric space, for us, it's actually very much about an open communication process. The policy is intended to be very, very simple, right? A few pages long, not 30 or 40 pages with an ISO contract and all these things that are very hard to understand. So while I do think that we will have scenarios where you're going to have that instance of it's 11 hours and 59 minutes, when there is an outage and we record that outage, we communicate it immediately to that customer. They know the clock has started. They know how long the power's been down. They know that we're tracking it. It's not an unknown thing that we're trying to hide and hopefully it doesn't hit. It's a good experience. We want to be very upfront with them. If it hits 11 hours and 59 minutes and the power kicks back on, it didn't trigger the policy, right? It was a 12-hour trigger. We're very clear with that language in the policy. I would say the harder part that we had trying to create our product, and you alluded to it a little bit, is around catastrophic weather exposure, right? What do you do if there's a EMP or some crazy event that happens that causes the policy not to trigger? Those are the things that are harder to work in, that you have to be very unique with your pricing models. You have to be very specific with your terms language on certain things that might not fall under that coverage, right? We don't brand ourselves as a catastrophic risk company, right? A short duration power outage product is not designed to cover a catastrophic outage like what happened with Hurricane Helene last year. You have 14 million people that lose power for, a week or 10 days. That's where I say that your core insurance products are still very, very important for you to have in the event of one of those types of losses occurring.
And yeah, that comes back to communicating what parametric insurance is and what it is not, and it being an overlay product or a nice to have, or maybe, yes, if you're a small business, it is a must have, but yes, not a replacement.
Yes,
necessarily.
exactly. And never try to actually replace, right? Now there's business interruption coverage that covers a number of different things that actually can be quantified, that businesses can purchase. But the closest product that existed to our Grid Protect product is off-premise power, right? It's an endorsement that exists in the commercial space that you can attach onto a BOP policy, I believe, in some cases, that has a 72-hour trigger, typically. That's a catastrophic policy. The number of outages in the U.S. every year that reach 72 hours consecutive is very, very small, less than 1.5% of all outages. And it's typically due to a tornadic event or a major flood or a wildfire or a hurricane. Those are catastrophic insurance events where you're typically in those cases going to see that the core insurance policy actually kicked in on those events, right? In Hurricane Helene, most of the businesses, unfortunately, they didn't come back. It wasn't because the power was off. It was because they had physical damage or flood damage and other things that actually impacted their establishment and location, or every other business and location that was around them, to where even if they survived, they lost.
Your customers.
They lost their customers. They lost their customers.
And talking about catastrophic risk, how are you managing risk then at Adaptive? Are you passing through policies to reinsurers, surplus lines insurers? What's the deal there?
Yeah, so we are an agency, right? We're an MGA. We've built our own internal proprietary insurance system, right? So we have a quote, bind, and issue platform. We have partnerships with a number of different national distributors that we can connect policyholders to if they need other coverages that we don't offer, right? If you're buying a Grid Protect policy from us, maybe you need a restaurant recovery policy for your restaurant, or maybe you need a new BOP quote for your business. So as an agency, we can pass those quotes on. We can quote them through partnerships that we have. So we're trying to create a better experience for, for that customer. But on the catastrophic side, this is where our intelligence platform is starting to gain a lot of traction, really helping businesses understand what their risk profiles are. So we have a risk scoring model where we'll help somebody understand what are their actual risks to a power outage, what are their actual risks to a number of different climate events that could happen, whether it be a wind event, a hail event, an ice storm, a deep freeze, a heat wave, all of those different things. We've collected tremendous amount of both public and private data and have an incredible data scientist on our team that joined us from American Families Data Science Lab back in March of this year, who's building out some really interesting models around what is the likelihood that something's going to happen at your location. Because the other piece that we want to do is make sure that beyond just the parametric, we're using the data that we've already optimized for to create a better experience and help that customer understand what their risks are.
I didn't realize you had that piece because
Yeah.
that was going to be one of my questions. Like, are you building some capabilities in-house that give you a certain moat, or are you kind of bundling together, stitching together a bunch of different services, analytics tools, and insurance partners together? And I think there are different ways to create businesses in this space. And it sounds like you're going down the route of, yeah, we want to build some really great analytics, but we also, our distribution, we're very happy to do this agency model and also recommend other products that we don't provide, but might be right for your clients.
Oh, absolutely. I mean, and I think this is, the cliche in our name of being adaptive, right?
Good
Is
point.
we like to be very open-minded in ways that we can serve our customers, whether that's with a product that we built and we own in-house, or that's through a partnership or through some other means that we can connect that customer with a proper product that they need to have. You think about what Amazon has done very, very well for a number of years, right? They created an experience for that customer at the time of checkout where they can access all the things that Amazon thinks they need. They put them in an environment where it's very easy for them to add. You see that in half the time, the products are owned by Amazon Basics or one of Amazon's companies. In many cases, it's not owned by Amazon. It's one of their partners who are selling products on their platform. So for us as a technology company, just it's gotten so easy to be able to partner with others, and you can have as a founder, I always have this idea of back and forth of, our first lesson as a founder is don't run out of money, right? So do I want to build this for
Harder than it
myself?
sounds, huh?
Exactly, right? And as an agency, in some cases, I could build a program that I'm going to make a commission on as an MGA, or maybe I could partner with somebody else to offer their program where they're going to pay me as an agency, and I'm going to make a very similar commission that might be a few points off, but I didn't have to invest a significant amount of funding right now to build a new product. So, we go through these exercises on a daily basis with the company, and everybody has a voice and an opinion on, are we looking at a shiny penny right now, or is this something that could create value for both the company and our customer base? And then we make a decision on how we want to proceed and what we want to invest in. And that's where the, intelligence platform came from was this is something we need to own. This is something we need to build. These are proprietary models that are going to be our moat, that are going to help us underwrite and make decisions better than some of the competitors that we know will come to the market at some point in the future. And that's a focus for us and something now that we've started to optimize and are starting to have conversations with partners that are like, wow, this is very interesting data. We would potentially want to license this data and it's new revenue opportunities. So it just continues to evolve.
Yes, I was going to ask about the competitive landscape because I've noticed two trends. One, yeah, parametric focused startups who are coming in hot from founders who used to work in insurance or used to work in occupational pensions or whatever, and they realize the gap there. But then you also have these large companies. I'm seeing a lot of geospatial companies or companies that gather Earth observation data, realizing that their data could be useful to be sold to companies as parametric triggers,
Sure.
essentially, to inform parametric triggers. And I'm sure you've got some of the incumbent P&C insurers who are thinking about this now, quite a lot, and reinsurers as well. So how do you see the competitive space? Who are you looking over your shoulder to check who's behind?
Yeah, so I'd also actually throw a third in there and say, investors as
Oh
well,
yeah.
right? So on Adaptive's cap table, we have an investment firm called Seraphim Space, which was a geospatial technology investor that does a lot of stuff in the satellite imagery space, which you would think, what do they do with Adaptive in the climate space? And when you think about the geospatial data and ground truth data, how do we invest in companies now that are going to use those assets together, right, and bring those things together? And we've been lucky to work with, with great companies like Montauk and Congruent Ventures that actually led our seed round. But the idea around, what we're trying to do with our products, what we're trying to do with our partnerships is be first to market, stay out ahead. Like that's our competitive advantage. Like I've been at a startup. Hippo was 8 people when I joined. We were
Mm-hmm.
almost 500 when I left.
Yeah.
We raised almost $700 million in the 4 years that I was there, which is not an environment we're in anymore unless you're an AI company, right? That's
Mm-hmm.
the only time you're raising money like that. So I enjoy competitive landscape. I have my whole career. I've always felt that insurance is so massive and there's just such a need for it and it changes so much daily. Like you understand that reinsurance market, right? So you could have 20 different parametric companies that all come along. Each one of them is only going to get a certain amount of capacity out of the reinsurance space for whatever they're doing, right? We're working with Tokyo Marine HCC as our paper provider and capacity provider on our program. Credible company, A++ rated. They've been in the business for forever, right? Everybody knows their name, but we still have a finite amount of capacity that they're willing to give us until they figure out how the program works and how we roll it out and what is our competitive moat and what do losses look like over time. I'm actually more excited to see more parametric companies and more insurers start to invest in some of these parametric companies as a new means to create a new value added product for customers, right? The piece that I'll continue with, and I've already talked too long, but I'll throw this on at the end. The piece as an insurance guy that makes me more concerned about the competitors coming into the landscape is, insurance is a regulated industry. Even if you're selling surplus lines products like we are in the unregulated space, there are still a lot of financial laws. You're still under the jurisdiction of each individual state. You still have requirements that you need to follow. And sometimes you get, founders and new groups that come into our industry that think they're going to revolutionize and change everything on a whim overnight. And that makes it harder for us to move forward because then the regulators want to push back to slow down and make sure that you're following the law. And that's something that's super important for us from a compliance end is to make sure that what we're building is done the right way so that it can scale the right way so that we're not getting all the way down to the 1 yard line and then all of a sudden we get a penalty that kicks us back 40 yards because we made a mistake. And that's the piece that I'm always concerned about to make sure that we avoid.
Yes, it can be a litigious space, insurance.
Very
So that's
much.
one thing, and regulators pay attention, and actually state politicians pay a lot of attention as well, especially in Florida, Colorado, California. The last few years,
Yeah.
it's been a real
New
political issue.
York as
New York,
well, which is the
increasingly.
financial services market as well,
Hmm.
not just insurance, right? It's everything financial. So, and it's not an easy thing to do. Like regulators have a very, very tough job to do with a consumer as well as managing one of the most important products that exist for the daily lives of Americans and people all over the world. It's not an easy thing to do.
And then there's reputational risk as well that you
Oh,
run, right? And
absolutely.
insurers are not exactly the most popular of
Yes.
institutions in the
Yep.
US or indeed around the world. And with new products like this, if they work and there's good news stories, and it does sound like you're trying to promote the good news story, then that's all well and good. But all it takes is one or two bad um, disgruntled customers, let's say, or awkward situations with a parametric trigger to cause a blowback via the media and then via regulators. So
Yeah.
you have to be, yes, very careful to navigate those.
Yep. Definitely. Definitely.
Now, just finally, then, I want to know where you hope adaptive insurance will be this time next year. Hopefully, we'll have you back in the studio
Yeah, would
this
love
time
to.
next
Would love
year.
to. This is
Maybe
great.
you'll be more frazzled and grey, or maybe you'll be, soaking in some luxury goods because everything's going great.
I hope that's the case,
But what's
man.
the kind of the roadmap for you?
Yeah, the roadmap for us right now, obviously, first and foremost, don't run out of money, right? Like the
Yep.
spend is real, and obviously the market and what we're trying to do right now is real. I would say the grand vision for us a year from now is that the team has continued to expand, that the product has continued to resonate in the market and continued to expand. That we've somehow found a way to expand our relationship with Tokyo Marine beyond just our initial product, right, where we actually have a couple of different offerings in the market. And I would say that the big piece that's been a big focus for us that a year from now I would love to see really ramped up would be the embedded channel. Like being able to partner with others that are like-minded and have products that we can take to market, battery companies, generator companies, solar companies. You think of the OEMs that manufacture, electronic products that are in homes and businesses across the US. I do feel that there is a tremendous opportunity for embedded insurance products, and we've seen this trend with travel insurance and cancellation insurance and other things in the past where making it easier, where the customer doesn't necessarily have to understand the value. The person who's giving that customer another product understands the value, so they include your value with their product to create a better experience for their customer at the end. And that's the piece that I would love to see, whether it's just adaptive and other companies at the same time. A year from now, hopefully we'll see a bit more, we'll see a bit more of that in the industry. And there's a lot of investment coming in new tech startups that are doing the distributed energy stuff where they're starting to get into a lot of homes where it's much easier to partner with somebody that's small and nimble, can run a POC and say, let's test this out in Texas or let's test this out in Florida, than trying to go after a national company and be like, let's roll this out across the entire US. And it takes 10 years to get that done. So
You don't have that sort of time.
yes, exactly. Let them do
Well,
their thing.
I'm excited to see what adaptive insurance is cooking, and
Yeah,
look
man,
forward to
thank
keeping
you.
track of your company and your products you're rolling out. So please keep in touch. But for now, thanks so much for coming
Will
in.
do, man. It's great to see you as always. I appreciate you having me on.